Hello, and welcome to this week's Profit Maximizer Moment. This show is dedicated to helping business owners dramatically improve their bottom line with our weekly profit maximizing tips that you can use now. I'm your host and coach, Wayne Blau. I'm also the founder of a local CPA firm that works with business owners to help them make more money and keep more of it from the IRS. I do that with our profit coaching programs and our tax planning systems, which saved our clients millions of dollars, all legally, because, like I say every week, and tell my clients, I love my clients, but don't wish to share a jail cell with them. Today's video, we're going to change course. We're going to talk about mastering your cash conversion cycle, which is something most business owners, especially new business owners, don't even have a clue what we're talking about. But first, today's program was brought to you by Profit Maximizing Publishing, which published my book, The 90-Day Profit Reset. You can see it right here. You can still find it online. I think the Kindle version is less than $5. The hard copy is $20. And heck, if you're in the El Paso area or someplace where I can mail you one, I'll mail you one for free. Just text me or email me. All right. Hey, so what is the cash conversion cycle? All right, the cash conversion cycle. Look, let's back up even further. In every business, cash is king. You're going to go out of business without it, even if you're profitable. And I see this often. I'm making money, but I have no cash. Why? Sorry, a little rush today. Just as I was getting ready to go on, our heater isn't working. It's El Paso, yes, I know. We're wusses. We don't like it to get below, 65 if you're up north somewhere. But I had to run home, help them with it, and got here like 5 minutes late. So, anyways, so sorry about starting late. Look, even if you're profitable, if you run out of cash, you're out of business. And even if you're not profitable, if you have cash, if your business has enough cash, it can hide a multitude of sins. But the truth is, very few business owners actively manage their cash. All right. They manage their sales. They manage their disbursements. So isn't that managing cash? It's a start. Okay. Look, like I said, business owners usually love producing and selling their products. They often feel that managing the cash is their bookkeeper's job or their CPA or their tax preparer. That couldn't be further from the truth, because the biggest problem with that is that if you run out of cash, like I said, you're pretty much out of business. Your employees expect to get paid every Friday or whenever payday is. Your landlord expects their rent. If you own the building, the bank expects to get the mortgage payment. All right. Payroll taxes are due every time you do payroll. And the list goes on and on and on and on. We all know that. I always joke, you take in a bunch of money with your left hand, you throw a bunch of money to people with your right hand and hope a few pennies fall down. Like pennies from heaven. I don't remember what movie that was or whatever. So when a business owner starts to run low in cash, they quickly have to figure out how to get more. This usually means collecting their receivables, investing some personal money, running up credit cards, and asking for loans. Once the cash balance is back to normal, everything is business as usual, at least until the next cash shortage. The best way to solve cash flow problems permanently is to speed up and complete the sales to cash process. This is what I call the cash conversion cycle. Okay, so what is that? Well, think about it. It doesn't matter. You advertise your product or service. The customer looks at it, places an order, or buys something from your store. Your staff turns out your product or service, or you have to buy more if it's bought. The product is delivered to your customer. The invoice is sent. You collect the invoice. The staff is paid. Your vendors are paid. Any cash remaining is called cash flow. This is a small amount of your collections that actually finds its way into your bank account and stays there. Excuse me. Well, that's how it works in a perfect world. And, if you're a retail store, you would think that doesn't apply to you, but think about it. You got to put inventory and you got to pay for the inventory long before you sell it. All right. But in the real world, even if you're not selling a product and you're selling a service or you're invoicing, you collect the invoice before you have. In a perfect world, this is how it would be. You get paid before you have to pay anybody else. That's a pipe dream. Anyways, most business owners know that's just not how it works. We don't live in a perfect world. And the truth is, we often have to pay our staff, pay our vendors, all our overhead, or rent, mortgage, whatever, before we collect anything. And it gets worse. Every business owner has certain fixed expenses, rent, loan, interest, taxes, insurance, utilities, that have to be paid monthly. even if there's no cash coming in. Accountants and bankers refer to this as overhead. And bad joke time, I joke that this is called overhead because they're constantly hanging over your head, demanding that you participate in a never-ending hunt for cash. I said it was a bad joke. What do you want from me? So why is it so important to improve the sales to cash cycle, and why I feel it's so critical to your success and one of the most overlooked things in business? Why is it overlooked? Well, A, they don't understand it, and B, it takes work to improve. All right. So first you have to understand it, and then you have to take steps to improve every step of the process. So let's talk about that. And truthfully, the payoff is big. Amazon, let's look at them. They're a great example of a company that's almost perfected this. Think about their business model. Everybody pays with a credit card up front. You order something on Amazon, you have a credit card on file, one click, bang, you got it. It's a little too damn easy. And this allows customers to place an order in one step. They have several regional warehouses. They have one in El Paso now that makes it easy to ship the product as soon as the next day. This fine-tuning of their system has allowed Amazon to dominate the online retail world and easily compete with most, if not all, brick and mortar stores. So how will speeding up the sales process improve your cash flow? Compare these two examples. Company A, I place an order today, it's delivered in a week, and I get an invoice at the end of the month, and then I get to pay it 45 to 60 days later. All right. If I bought it today, today's the 13th when I'm recording this of November. They don't even send me an invoice until at the end of the month. They may not even do it exactly right. They may do it on the 4th or the 5th, and I have 45 or 60 days to go. So I'm literally paying their invoice sometime in January. Now let's look at company B. I place the order today. I pay for it today, or at least leave some down payment, and it ships tomorrow. The invoice accompanies the order is emailed at that time, and I pay the remaining balance, if any, in the same 45 to 60 days. Company A will receive the cash from my sale 90 to 100 days after the sale is made. They have to maintain a large cash reserve to finance this amount of work in process and receivables. Company B has purposely designed their sales to cash cycle so that they receive at least half of their sales price before the product is delivered. This one change can dramatically increase their cash balance and allows them to make more sales without running out of cash. Listen to that again. The amount of sales that a company can properly finance is based on their cash conversion cycle. By doing this one switch, I can run the numbers, and I'm not going to do that today. That's something I usually do when I'm coaching people, and I'll probably do it in a coaching course that I'm putting together. That one thing allows me to have more capacity. It's not capacity for production or putting it's not production capacity or purchasing capacity. It's the capacity to flip my money more often so that I can actually get the cash in, boom, replace what I did. All right. But I can hear you now. That won't work in my industry. Heck, I thought the same thing until recently. Truthfully, like I said, I was one of those business owners that believed that. I assumed I had to follow the traditional business design of most CPA firms, where we run like company A above. They bill when the work is completed and wait to collect their receivables. This leads to a constant struggle to collect enough cash to cover payroll and pay overhead. A few years back, I made the change, and I'm about to do another change where we're changing our model entirely, where I'm going to bill monthly, except for brand new clients coming in that have catch-up work. Otherwise, it's going to be monthly or in advance. And we're going to do that on everything, including tax returns, because it's worked before. All right. A couple of years, like I said, we started to require that a client's consent to monthly billing via credit cards or bank draft. I didn't want to hold the receivables unless absolutely necessary. Truthfully, I got away from that during COVID because the world went crazy. Now I'm going back to it. Okay. I used to have a huge problem collecting on tax work. If I let my client take the tax return without payment, I just didn't get paid later because there's no pain. We fixed that. We don't do that. I get to whenever they feel like paying me. Now we simply tell the client, you can't have the tax return until you pay me. All right. The IRS deadline helps me collect. We're going to go a step further. We're actually going to, in January, say, all right, folks, I got limited capacity. This is how we're going to work. If you want to reserve your spot, you need to pay 50% up front or all of it up front. I haven't quite worked out the wording and what I'm going to do, but that's how it's going to work. I went a step further, and I did this, and I didn't realize it was 2018, 2019. And like I said, COVID came, and we were so dang busy with all the COVID work that I didn't continue it. But I got to thinking, why can't I get paid up front? And this is almost unheard of in the tax business, which is in many ways is just a commodity business. I first told myself I couldn't because no one else was doing it. I found a CPA up in Oregon who was getting prepaid for most of his work. So I put together a system to give my clients an upfront discount for paying me monthly. I offset that discount by upselling an audit protection program. The result was my net income was basically the same. It was actually a little bit more increased, but I was getting paid in advance. All right. I don't know if that's the model I'm going to follow because I'm not a fan of discounting, so I don't think I will. Matter of fact, I think there'll be a price increase. All new clients are now required to leave 50% down. Truthfully, I usually figure out what I think it's going to cost, increase it by about 25, 30%, require a down payment for that. So I've gone away from 50% down, looking for like 100% down. They don't have a relationship with me. We don't know how promptly they will pay. This helps us weed out the deadbeats because what I found is they're not willing to leave a down payment. They're probably not willing to pay your invoice later. So why? Might as well not do the work. Get somebody who's willing to pay. For our business clients, we created a variety of packages combining tax preparation, year-end financial statement, tax planning, QuickBooks support, sales and profit consulting. We designed them to provide the clients what really wanted: more sales, more profits, and more cash in the bank and less taxes being paid, while getting what we really wanted, which was a better, higher monthly income. This allowed us to increase our average sales per client way above what the industry average is. And again, we're changing again. We're basically we're forcing the issue now. Before, I gave clients an option. You could be, on a monthly, or you can do it when we do the work. That's no longer it. We're not doing that anymore. And, truthfully, it's because we've hit capacity. And if I lose a few clients, that's fine. I mean, I don't want to, but, I'm in business too, and so are you. So it comes down to, if your cash flow is a problem, you need to look through all the steps. And to be honest about it, I'm going to continue this because next week we're going to talk about, I'm going to give you my top 17 steps to improving your cash conversion cycle. And we'll do that next week. And then I think the week after, I'm still beating that up. Now, well, I continue with some other things, and we talk about receivable collecting and how the best way to do it. Because that's the number one thing I see as a problem for most business owners. They don't know how to collect receivables. I'm telling you, eliminate receivables if you can, and it's possible. I've been doing it, and I'm doing it on my own business too now. Hey, until next time, this is Wayne Blau saying, let's make this our most profitable year ever. God bless, and have a great weekend, and I'll see you at church. Thank you.